Prime Edition with me, O'Brien Kimani. Time now for us to focus on investment matters. And of course, we just want to have a look at the investment landscape here in Kenya. And of course, we're talking to John Kamau. He's the head of growth and customer experience excellence at Avocap Asset Managers, one of the latest asset managers in Kenya, which came into the market last year, mid last year. Thank you very much indeed, John Kamau. Before we dive into the conversation of today, you were telling me something about the Donald Trump tariffs.
Yes.
What were you saying?
I'm saying that this is a time of realignment in the global trade sphere, because you have seen what has happened. The US is now, Trump is blowing the trumpet. And when Trump is blowing the trumpet, then everyone has to take a dance floor. And so this is a time of a lot of realignment, 10% reciprocal tariff here for us in Kenya. So we want to see how the government will respond, whether to go to the negotiation table or how that will affect. Of course, for us as a country, because of our trade relationship with the US, in terms of volumes of trade, it might not have a very high impact immediately. But of course, because this is not something that is just being imposed in Kenya, then we could see a lot of realignment, shift in terms of trade, looking for partners. So basically a time of realignment in the trade, global trade sphere. Yes.
I mean, of course, when you look at trade between Kenya and the US, you're looking at a trade value of about 1.5 billion US dollars, and that's quite small. I mean, when you look at the bigger scheme of things, you know, vis-a-vis countries like China,
True.
where they talk about hundreds of billions of dollars, you know, every year.
Yeah.
But if we find ourselves in a situation whereby we are going into the negotiation room with the Americans, what would be our leverage point?
First of all, as you're saying, rightly putting it, our biggest, if you look at the trade volumes that we move between us and the US, it's relatively smaller compared to our trade volumes with Europe, the Middle East, and China and the Eastern Asian countries. But we don't forget the fact that we have a very special agreement, the AGOA agreement that is coming to an end unless it is renewed later this year. So, and we all know how that affects us in terms of even the volume of goods that we move. Much of the 1.5 billion. Last year, I think we traded about shy of $800 million to the US, and much of it was in the AGOA Pact. So this, as much as it is a small pact of trade compared to what we do with the other countries, but it still has a lot of effect. And therefore, we want to see how the government reacts. We want to see how that realignment will be, so that now we safeguard the little that we are trying to grow in terms of our relationship, our business relationship with the US. Yeah.
From where you see it, do you think the world is likely to enter into a recession?
We might likely see that. Of course, you know, the world has become a global village. And when one part of the country, one part of the world is affected, then the whole, it's almost like a chain. So we, from the numbers that we've seen in the recent past, the slowing growth in the GDP of major countries. We've seen now there's China, which was going at the peak and now slowing down. So we are likely to see ourselves go into recession. But let's see how this new tariff ball plays. Yes,
definitely. I mean, John and me, we shall be here just, of course, to see where this conversation is going next. Let's now get into the topic of today. And of course, we just want to have a look at Kenya's investment climate. I just want, first of all, to hear this from you. You started operations in June last year.
Yes.
So now you're how many months into the market? About
10 months.
10 months now, yeah?
This month, yes.
How has the market reacted to your entry?
I can say that we are very fortunate coming into the market when there's a lot of financial literacy, financial wokeness. What felt like, it's a reserve for a few people, investments. Everyone is now talking about how do we make money in the capital market, in the investments. So the reception has been quite good. We are entering into the market when there is a lot of hype, a lot of knowledge, and therefore we are finding it quite easy. What we now need to do, what we are currently doing, is a lot of realignment, because people normally chase, when it comes to investments, the first thing they normally chase is returns. And that should not, as much as it's a good thing to chase, it's not always the first thing to chase. You look at so many things that are into play before you get into an investment. Yes.
You know, what segment of the market do you find exciting?
In terms of demographics, the first thing is that there's a lot of uptake of investments from the young people. And when I'm talking about the young people here, I'm talking about the 35 years, at least below 40. Actually, looking at our clientele and people who are investing in these capital markets, you find there's a lot of financial literacy, a lot of information that is within the youth. So people who are graduating from colleges all the way to the people who are starting the jobs, and some who are young entrepreneurs and young professionals rather, there's a lot of wokeness. And we find that exciting because it's not a difficult conversation to start with them, as opposed to probably our parents whom, you know, they have been there, they have done land, property, and it becomes a very difficult conversation. But again, it's something that it's not, you know, we are by and by getting there. Yeah.
You're getting into a market where, you know, it's highly dominated by three entities.
Yep.
And where the others are trying to crack the market. What do you expect to be a niche market? I dare say that one, the young people. The young people.
The young people.
Do they have the resources?
They do. We mostly look at the young people in terms of, you know, they just recently graduated from school. They probably don't even have a lot of, you know, money to spare. But you will be shocked. We are now in the gig economy, where young people are taking jobs. You know, the employment space is now borderless, finding people working remotely and making their money. But even the people who have been there, you know, 5-10 years in the job market and making money, they're also asking themselves where to go. And now the conversation that we are having, people who have been there for a longer period of time, is what is the alternative to the traditional investment ways of doing things. And that conversation is something that we have found even people who are in their 40s, 50s willing to listen. Yep. And
when you talk about traditional investment sectors, you're talking about institutions like the capital, the equities market. You're looking at the stocks market.
Real estate.
Or the real estate,
yes.
I mean, which has been like the go-to investment area in the last 15 years. Is this likely to change anytime soon?
This is likely to change, and it actually, the tides have started changing. People are realizing that sometimes we do these investments, and for example, you find that someone is very, very asset rich, but very cash poor. And while you climb up the age ladder, you realize that you need to be more liquid, because you know there are bills, you need medical care, you need to take care of yourself. So you find that as much as you have accumulated a lot of immovable assets, you also need cash. And so those conversations are what is spurring people. You know, we are at a point where we have more returns and better returns in terms of investments from capital market products than probably real estate than it used to be some years back. And therefore, if you find someone who is retiring, they might not just look at, they are not looking at you know, getting into real estate like they used to those days. They are looking at something that could give them income and something that they can liquidate easily. And therefore, that is the starting point for the conversations about investing in capital markets. Yes.
You see, sticking by the old mantra that asset is queen, cash is king.
True.
Then what are the downsides of having a lot of cash as opposed to investing in immovable assets like gold, like platinum, or hedging your funds against things like gas and oil?
Definitely, we do not actually encourage people to hold a lot of cash, because holding a lot of cash, you know, when you're saving money, you're not just saving it from spending it. You're also saving it from growing. You are preventing it from growing. And number two, you will also find yourself missing on opportunities in the market. So what we do is that we encourage diversification and optimization of any investment that someone has already done. So what we encourage, we look at your portfolio, we look at you as a person, we look at what you have done, and we advise on how to diversify and to optimize that investment so that you have assets that are giving you cash because you need that liquidity. You have some that are semi-permanent and some permanent because you also want to transfer, wealth, transfer that wealth that you have through tears, blood, and sweat gathered over time. So that balance is what is needed. We've gotten into a situation whereby people are, if you have not invested in land, from where I come from, we call them buroti maguta. Yes, yes.
If you have not invested in one, then cancel yourself out.
True, you are out.
You are not an investor.
You are not an investor.
What do you tell people from my place who are keen on investing in buroti?
This is my encouragement to them. Diversification. And let me give you an example, Kimani. We normally buy land, and I'm happy that you're bringing this topic because immediately after campus, even before I was 6 months down in employment, I got a piece of land. Someone encouraged me. Now I bought a piece of land somewhere interior in Central. I can't even take you where that place land is. And what was the discussion? Buy this land, it will appreciate, and you will sell it at a premium. And right now, if I needed to sell, one, I don't even know where the place is. Two, I don't even know the market price. And that is the danger of accumulating a lot of assets. The notion has always been land never depreciates. But this is the question. At what rate is it appreciating? Do you even have information that drives the market for land upwards? So my encouragement to people from Murima and where I come from is that it is high time to look at investment as in a diversified manner, so that on one hand you have those pieces of land which are good, but on the other side you have something that brings you cash that you can easily convert, that you can easily sell when an opportunity comes, and invest in that opportunity that arises. Don't over-concentrate your assets so that you are asset rich and cash poor.
When you're talking to young people, where do you tell them to invest in?
The first thing when you're talking to young people, even before you talk to them about places of investment, talk to them about their relationship with money. Remember, Kimani, our perception about wealth, our perception about money is historical. You know how you were brought up, who used to make decisions about money in your family, influences a lot how we perceive wealth, how we perceive money and all that. So before we even talk about investments, we talk about how is your relationship with money. And after that, we talk about what are your goals. So we start with the goal perspective, because if you do not have a goal, then speed is not an advantage. You need to first of all set goals, and when you have set goals, then we start looking at how do you then fund these goals. So we are looking at postponing gratification so that you can buy in for a better future. You start with a relationship with money, go with goals, go to budgeting, and now move slowly towards getting to where that goal is. Yes.
Currently, I mean, the hottest investment idea in town is MMFs, or what we call the money market funds, or fixed income funds. What are you telling people about this?
The first thing is that money market is not an investment per se. Money market is a place to park your money that you are looking to invest in a higher return platform. So, for example, if you have a short-term goal, some of us are parents, we are looking to next month to pay school fees for term 2. You instead of parking that money somewhere where it's not earning interest, why not park it in a money market fund? You have a short-term goal, you are planning to go for holiday, or your birthday is coming, or whatever that short-term goal is, use a money market fund platform to raise that money. So per se, if you look at it in the context of investment, money market is a premier cash management tool. But it's also a good place to start for people who probably don't have the higher minimums for the other fixed income funds. So what we say is that you can start from somewhere. We have seen our market very creative. There are so many collective investment schemes. Companies are very, very innovative when it comes to these platforms. And so there are so many of them. We start from the money market going all the way to all those other capital markets products.
And we are hearing companies, offering some high returns on some of these MMFs. Is this realistic? Actually, I mean, you've getting companies talking about returns of almost 17% annually. Is this realistic in our world today?
I would say that Looking at it from last year to this year, rates have been going down, and that has been catalyzed by, the reduction in the interest rates paid by the government securities. I mean, last year we were buying treasury bills at 14%. Today, the 3 months or 6 months bills are down sub 9%. And so there is that trend downwards, and of course, I believe even the government wants to make it even lower so that they can spur cheap credit and all that. But every fund manager and every investment company, they have their own strategy of investment. Remember, money markets invest in short-term securities, treasury bills and short-term bonds. And depending on the combination of the strategies that companies are employing, you can look at, why some are performing better than others. The bottom line is, are these companies registered? Are they licensed by the Capital Markets Authority? That is the first place to begin. You begin by looking at the registration so that you know when you're getting into it, you are getting into a registered and licensed entity.
And I like the fact that you're bringing government investment papers, talking about bills and bonds. And when you look at the yield curve here, you're looking at a rate of at most 12%.
Yes.
And in most cases, government papers, they set the tone
yes,
as to what you're likely to get in terms of yield.
Absolutely.
So when you have a company telling you that our returns are 15, 17%, should you run?
One, the investment strategy. Let me tell you something that most people don't know. You can actually participate in bonds in the secondary market. And in the secondary market is where, you make money through bonds. Because the strategy there is to trade. So the same bond you'd buy at 13, 14%. In the secondary market, it yields 25, 26%. And
when you're talking about secondary market, I help people understand which market is that?
It's the secondary market is the market. The bond market at the Nairobi Securities Exchange.
Yeah.
By the way, O'Brien, I'll shock you. We trade more bonds than we trade shares on a daily basis.
Yeah.
We are trading bonds of between 6 to 10 billion on a daily basis. And so if you are, for example, to retire your bond, you would look at a stockbroker or your investment banker or your fund manager, and they would buy and sell it in the secondary market. So we are talking about returns in the secondary market that are higher than in the primary market, which most of us know. Number two, remember the strategies that I talked about by fund managers. You find that fund managers are not just creating products that are limited to the products in the capital markets in Kenya. So you find there are special funds, and these special funds tend to have higher returns than your normal government security papers.
Yeah. This afternoon, and I was having a conversation with one of my colleagues, Catherine Achenga. She's a suave and sophisticated investor. And she was asking me one question. I mean, where do fund managers and asset managers, invest in to get these kind of returns?
Let me start by saying fund managers in Kenya have been accused of being lazy in the previously. The government papers are going to 12, 13%, and that's the same rate you are giving. So fund managers have become innovative in that, one, the markets have become, the world has become a global village. So while we are talking about 12, 13% on papers here, we are talking about very, very good returns in the global space. For instance, there is a resurgence in the stock market in Africa. Last year, we saw markets performing 25, 26, 30. In fact, some markets like Ghana were up 56%. So when you have fund managers who are creative enough to tap into those markets, then definitely you will find them delivering very good returns. You look at the chaos that is happening now, for example. Gold, as we talk today, is at its all-time high.
It's about $3,200
exactly
per ounce.
Yeah, all-time high. And remember, some of these funds are investing. They have, some of them have invested in commodities, have invested in minerals. So why won't they deliver astronomical performances? They definitely have a reason why they do that, because they are investing in different markets.
I want to hear this from you, and I like the fact that you're bringing in the concept of investing in immovable assets, and of course, tapping the global gold market, the oil market as well. In a situation whereby the world goes into a recession, what will happen to these investments?
One, different investment funds have different exit strategies. And so you find that some of them, they just have a lock period. You can actually, after lock period, you can exit out of those investments. But remember, even when we are in recessions, there are places that are always doing better than others. There are markets that are always doing better than others. We are talking about, in our country, for example, the fixed income funds going down, on fixed income assets going down, but on the opposite side or on the other side, the stock market is up. So while one is not doing so well, the other one is doing quite well. So in any case, at any given point in time, and even if you look at it historically, even when we are in recession, we're always finding that there are other markets that are doing well comparatively to others. And so in as much as we are looking at probably getting into a recession, it's not all gloomy for the investors.
Very well.
Yeah.
Before I let you go, John, I also want you to help us understand things. I mean, you have 500,000 shillings.
Yes.
You're looking for investment opportunities. You're presented with an opportunity to invest in a SACCO, in the stock market, in government papers, in land, or in CIS. Where would you invest? Why? And why wouldn't you invest in where?
That's a very, very good question, and I like that example. Let me respond by saying this. Number one, one of the drivers of the choice of investment is the reason why you are doing this. Remember, some of us have longer-term goals, some of us have shorter-term goals, some of us are willing to take risk because what we want to do with the money may not be, we could look at the opportunities. Whilst for someone else, this could be a retirement plan. You don't want to chance with it. So the first thing is to look at what is my goal. If my goal is to probably acquire some loan in future, then I am better off parking some of that money in a SACCO. Because all these platforms serve different purposes. We talk about investment in stock markets and in capital markets because of capital gain or capital growth. We talk about putting money or parking it in SACCOs when I'm looking for probably a credit facility. We talk about buying land for speculation when you have information about appreciation rates, and you have information about, you have concretized what you want to do with that piece of land. I wouldn't tell you outrightly, take the 500,000 in SACCO or take the 500,000 shillings in a money market fund. The first thing to ask is, what do I want to achieve? The second thing is this platform going to help me actualize that? And the third thing would be, am I optimized?
Meaning?
Meaning, if, for example, I want to grow my wealth, is it prudent for me to put all of the 500,000 in one asset? Or will I be optimized if I spread it across different investment opportunities?
You diversify investment
Diversifying them, sure.
Very good. What else do you want to tell us?
I want to tell people two things. Number one, the time to start investing is now. There is no perfect time. Most of us are always waiting.
It's not yesterday.
It's not yesterday. It's not tomorrow. It is now. Because most of us are always waiting for the perfect opportunity for you to be able to invest. It is now. And the reason is because the opportunities that are there here today, if it passed you, then definitely you missed out on it. So the first thing is start where you are. And the second thing is don't always take advice about investments from your friend. Because you will ask someone who has already burnt their fingers or they did it in the wrong way. Always consult a professional, because you are so busy here with telling us or informing us about what's happening in the world. How will you be able to know what's happening in the market, for example? It is only someone like me who will come and tell you, by the way, O'Brien, there is an opportunity here. You can do 1 or 2 or 3 things and you'll be able to take it. Start from where you are and look for a professional to advise you on investments.
Very good. I think we can close it at that point.
Thank you.
Let's keep trading.
Thank you. Sure. Let's keep trading. Let's keep making money.
Very good.
Thank you.
Kamau, asante sana for
Thank
your
you.
time.
Asante sana.
Well, John Kamau is the head of growth and customer excellence at Avocap Asset Managers, joining us tonight to give us more ideas on where to invest, how to invest, and what to expect. You're watching the Prime Edition, and with the time now coming to 10:05, we are taking our third break of this bulletin, and of course, we'll be back with more stories. Bye.